Alright boys, Friday. Couldn't come quick enough. Been a pretty heavy duty week in terms of market news, in terms of events, in terms of lack of sleep. Pretty much exhausted with the market right now. That being said, a little bit of action. To end the week, and you can't ignore this. The relief rally seems to be over for the pound yen in particular. Alright, so if dollar yen makes a more serious sell-off here, the pound's already rolled over from 132. Nothing really was said to start this. This is just more a little bit of pushback from US dollar strength, a little bit of risk off in the equity market. On that note, I'm going to close out the DAX. Fairly decent profit, so I'm okay with that. Just in case, right? Something bad happens. I want to keep on holding the Mexican. I did talk about the Aussie Kiwi. I'm going to talk about a bit more about Aussie Kiwi today. We've had next leg highs making an assault on this really big level here. Alright, because of that, I'm going to actually get neutral. And so a bit of a clean out here of some of these trades. Leaving me Mexican and Euro pound. Now the Euro pound is also gone from looking fine into the last 6 hours to looking terrible. Probably should lighten up a little bit on that too. So a bit of maintenance here on the account. Just I don't want to have too many biases going into next week. I suspect still that 100 is going to be tested on the dollar yen, and the price action today does not hurt that at all. The pound weakness is notable. Right now, there's nothing next week to get the market buying the pound in terms of data release. If you're looking at what's important, it's the week after. And so we've got a little bit of time for shenanigans here in the market. If the pound and wants to go low and the dollar yen wants to go low and the pound yen wants to test some of that previous support from the Brexit lows, then definitely next week it could be on the cards. I'll be watching carefully to see stock markets today and whether dollar yen is able to continue its little attempt at a rally. A lot of the Aussie Kiwi strength is coming from the a lot of the Aussie Kiwi strength is coming from the Kiwi weakness. Alright, so it's not exactly it's good that it's coming from the Kiwi weakness, but I mean, if everything's going lower against US dollar, if stocks are going lower and dollar yen's going lower, then the Aussie will be under pressure. It's not the cleanest way I want to play this. I'm going to watch it develop. It is one of the ways in which Aussie Kiwi will rally. There is a fair bit of focus from analysts about the diverging paths between the RBNZ and the RBA. You like that sort of talk when you're in this market. But to say that I don't trust the Kiwi is understatement, right? We've tested 105, we haven't broken 105, and the sharp push higher sort of rally isn't the most sustainable in the past. Yeah, and so I guess we're going to have some sort of consolidation for a little while before we make that next move. If I'm wrong, then I have to bring up my timeline for buying. Okay, I have to start to get back into the market because I definitely don't want to miss any of this. And I think it's going to happen mostly towards the end of next month as it rolls into November and the RBNZ rate cut on the cards there. But yeah, definitely noticeable weakness in the Kiwi. The daily, you can see the 200 is so far away. This key support coming up at around 71.80, 72. Now, if that breaks, we've got ourselves a really nice potential for a sharp move lower. One that I'll be watching closely, and that would be the main way in which we, potentially get this catch up just to the 107 level. The move to 110 requires the RBNZ to really become a focus point in the market. Everyone talking about it, yada yada yada. RBA is neutral, RBNZ is cutting rates, and whatever the stock market's doing, crashing, rallying, that just the Aussie outperforms whatever the Kiwis do. That's the main roadmap. It will happen quickly in a crash, in a stock market crash, so the rally will be accelerated. But the sustainability of it is questionable in a crash because the bounce backs means that the Kiwi will get bought usually a little bit sharper. So I'd rather us have a slower rally in a little bit more of a change of sentiment, right? Rather than a short covering rally really quick, sort of shoot higher as the Kiwis just sort of coming under short-term pressure. I don't want the short-term stuff. I want the whole market to really agree. Keep an eye here on the pound. It's being a little bit cheeky at the 130 level. Like I said, there's no real reason here. Not that I saw. There was a little bit of Brexit news. I'm not sure that can be the play to get the market reversing. Let me just check the Twitter. Twitter doesn't lie. I think it's just a failure on the top side, really. And, it was pretty aggressive pound yen selling. You don't need the reason, right? Wait a sec, what's they saying here? What has Johnson gone and said? Article 50 will be probably triggered in the early part of 2017. Okay, that's not so bad. Not before the end of the year. So I'm not sure how much the market can sell off on that one story, right? I mean, like the same story again and again. I suppose a lot, but you might get fatigue on that story. So I'm not convinced at all. I mean, that being said, the Bulls have to. It's a burden of proof on the Bulls, not the Bears, right? Bears are in control. Aussie Kiwi and New Zealand yen. An inverse correlation, maybe, not a correlation. Like, but yeah, I don't see why it would be that big a deal. I think I just broke my charts. No, they're just taking some time. Might have broken the stream though. Yeah, no, the it's more to do with the Kiwi dollar itself. There'll be definitely an inverse correlation with the New Zealand US and the Aussie Kiwi. It's been a while since the Kiwis had sustained falls though, so this is a bit of a rare occurrence and something to keep an eye on. Now, it's dollar yen. Dollar yen. You're gonna break my heart? I don't mind. I was hoping that we, consolidate above a 101 earlier today in Asia. I'd be like, oh god, this will throw a spanner in the works if we can consolidate above here going into next week. All of a sudden, it won't look so weak. I don't know. It's got that gravity feel about it again. It's almost like a time base. We come back in an hour or 2 hours. I check the charts. It'd be down at 175, and then come back, start a US session 160. I mean, if it continues lower, it becomes like, well, okay, we're going to test 100 again. And this is the third big test, guys. This is not something to be mucked around with. This is a very likely break. Who are we kidding though? We will be mucking around with that. My bias for buying dollar yen developed over the last 8 years has really got to get out of my system. I don't know why I believe in the BOJ. I definitely don't believe in the BOJ. I mean, I just fell for the whole US is going to raise rates and BOJ's going to be low forever. It just doesn't work out with this pair. So much demand for the yen. The rallies are so unsustainable lately. It's like I really want it to rally just for its own sake, right? take some pressure off the BOJ. They're all going to have heart attacks over there. It just makes trading a little bit easier when dollar yen plays nice with the stocks. Dollar yen being so low when stocks are so high, just broadly, I mean, we're really high on the year. It means it breaks down the correlations that you have with the yen crosses. And so I haven't been able to play yen crosses the same way I used to, which is like risk on buying Aussie yen. I mean, so for literally this whole year, I haven't been trading Aussie yen as my favorite pair. If it just started going back to reacting to risk on, risk off, the dollar yen part, Aussie continued to back to risk on, risk off, then we'd have this fast moving pair, the Aussie yen, which could be tradable. Sort of like a mini pound yen before pound got wrecked by Brexit. Right now, it's the Aussie's probably going the exact opposite direction, short term. 5 minutes as the dollar yen's falling. Maybe I should start selling dollar yen just to break my bias. Let me turn off the webcam. I think it's a webcam. Too beautiful for TV. No, we're not going to muck around too much with the market today. You can all see that it's rolling over in terms of the main trade in the market. It's the short pound yen trade. You probably want to keep an eye on that as the main indicator for some of the other pairs you want to be looking at. If we get a bounce in the pound yen, that'll make things a little bit more complicated. Otherwise, we've just got some straight up risk off into Friday. Going into next Monday as well, if the market remains on the back foot today during the US session. Yeah, it's setting the market up for a negative week. Let's have a look at the Nikkei. I know we don't watch the Nikkei that closely, but yeah, it had a terrible session today. Gave up a lot of those gains post-Fed. Yeah, I don't like the feel of this, guys. I don't like the feel of this at all. This is not the Friday that I wanted. I mean, I'm not in any of these trades, right? I'm not short pound yen. I'm not long dollar yen or anything. It's just I wanted to see some pound rally, and pound rally requires pound yen, and you're not going to get it otherwise, at least in the last post-Brexit period. Yeah, think big Forex, just hedge it with short New Zealand US dollar. I don't know. I mean, maybe straight up you got to hedge New Zealand yen with. Oh, you're playing from US, so you can't play the same pair. I mean, nothing wrong with hedging properly, right? Just hedging the actual Kiwi yen. Dollar yen might move quickly though. Are you worried about the yen part, or are you worried about the Kiwi part, or are you worried about both? I suppose both right now are getting smashed. Let's have a look at the Kiwi yen chart. It's probably the weakest pair in the market. You picked a doozy, mate. You picked a doozy to play. Whew. It's not looking good. Alright. Yeah. I don't know, maybe just close out on a rally. And get back up to 73.40. You're probably in too long anyway, right? It's pretty clear the market's trying to go lower. But yeah, if you really have to hedge, then hedging Kiwi makes sense. But buying Aussie Kiwi doesn't. If that's your trade that you're talking about, to hedge your New Zealand dollar exposure. The Kiwi and the Aussie move together a lot. This is just straight up Kiwi underperformance. That could be a short-term sort of scenario. If stock markets continue to fall, then the Aussie will fall as well. This won't give you clean hedging exposure. But short Kiwi might give you a little bit. Or short dollar yen. I mean, a lot of your selling is coming from the dollar yen. Nothing wrong with selling dollar yen, just in general. Okay, that's the preferred direction on this pair anyway at the moment. So you would get a fair bit of the movement that you're worried about will come through on the dollar yen, at least potentially, right? In fact, dollar yen might move faster than Kiwi yen if Kiwi catches a little bit of a rally, like it has in the last 5 minutes, right? Or last half an hour. So your dollar yen. Sorry, I was not thinking right, mate. I'm not thinking right at all. It's getting late. Getting late. Gonna have some beers with the boys. What have you got me here talking markets? Alright, let's have a look at the trades in the room. A lot of euro trades, huh? What is that? Painful to look at for anyone else. God. Why is the chart, why is the candles green? Why is the candles grey most of the time? What is this? What sorcery is this? Well, it's not looking good right now, the short dollar CAD. Yeah. What's the reasoning? Golfing 4 hour. A lot of these price action traders trade for pretty much any reason they can find, eh? Why not just want to sell the dollar CAD? I mean, are we selling just because of that? Do you know that it's caused by the Fed, right? I mean, I don't know. I suppose tech traders sell whatever the reason. They don't care. I suppose I like the trade. Give me a like. You got another one, huh? Long euro. So the correlation between these two is pretty strong. I just don't want to trade the euro right now. There's no movement there. Morpheus is just gone and done it. He's just bought it. Where you put your stop there, Morpheus? Where have you put your stop? He doesn't believe it. He's got a stop at 129.43 and a target 133. Okay, I like that. I mean, this would look great if that happened, right? A little bit of a reverse head and shoulders, bouncing off a key level. Yeah, get involved in that if it works out. Good luck. I think it is probably not going to happen. Oh, well, I mean, this guy's got the right direction. He's got a really big take profit stop loss though. I mean, that's just nuts. I mean, everything. You see how there's a problem here? You can't put your stop loss 2 times further away than you take profit. Yeah, but not too bad, guys. But I do want to talk about the Aussie Kiwi. So let's see how the banks have changed in their views. So this came out today. It's from Westpac, big Australian bank. Speculators in the futures market have built up record net long New Zealand US positions. That's a very good sign for us here. Dairy price rally lost momentum in the recent auction. That's true. And the RBNZ remained dovish. It's true. Meanwhile, the pricing in the RBA rate cut market is fading. That's true. And the recent speech by the new RBA governor towards to Parliament, he was very neutral. And the Aussie Kiwi is very cheap. That's also true. And they put the fair value at 111. Okay. The trading ranges since the 1985 New Zealand dollar float. Okay, we spend a little bit of time way higher. Alright, but we spent the majority of our time between 110 and 130. A little bit of time between 105 and 110. A tiny bit of time here lower. Never been lower than this, guys. So we really are at the bottom, but perhaps we can have outliers, right? I wonder what's going on back then. If anyone could find out when the Kiwi was getting wrecked, what year that was. It wasn't on the charts I can see. It must have been 90s or 80s. Maybe some of you are from New Zealand and you can remember back in the day. Alright, so really important here, the Aussie 2-year swap rate, which is the difference between the interest rates in the 2-year bond markets. Okay. Usually there's a big correlation between the two, and you've seen that it's broken down recently. So that's the Aussie Kiwi, and this is the interest rate differential. It's moving back towards zero. So there's a potential here for the snapback. It doesn't stay away from the red line, doesn't stay away from the grey line too much. So the main reason we're into it. Now, it's okay to get really excited about this trade. Just be aware that we've been excited about this trade since this divergence began, and we haven't had the snapback yet, and there's been a lot of false little moves, right? So it's by no means don't get overexcited here. If it fails at 105, we're back at 104.50, you know, and something comes out that just breaks the Aussie, and then all of a sudden we're heading back lower. You know, you're going to be cursing yourself that you chased the market up here. But by golly, do we want it to rally? I've got a lot of clients long Aussie Kiwi. Not many survived the rally, the fall, but few did. Alright, so RBNZ, so RBA rate, cash rate. Yeah, we got an inflation problem here as well, so that's going to be a problem later if we don't see a bounce back in our inflation. Market pricing in only a 20 to 30% chance of the December rate cut. Westpac expects the rates to be kept at 1.5% throughout 2017. RBNZ, now we were worried that the RBNZ was going to go neutral because the data's been really strong over there, but they reiterated the needed that a decline in the exchange rate was needed. They kept that for the last couple of months, last couple of meetings, and is noted by Westpac here to be quite strong as far as RBNZ's choice of words go. I mean, I'm not a word, you know, I don't study the RBNZ press releases, but I'll take these guys' word for it. I mean, I noticed obviously when I read the report, and when I read last month's, that there was still the same lines in it, but I didn't know where in the lexicon needed was, right? Because, you know, all these central banks have got different words for different keywords. They like to let the market know what they're thinking. So the Auckland Economics team expects 25 basis point cut in OCR. That's good, but there's a few banks who have changed their mind lately. Deutsche Bank still thinks they're not cutting, and Goldman thinks they're not cutting. Now, if they also cut and then go neutral at 1.75, it's going to be hard to see the extension past 110 on the Aussie Kiwi. Alright, relative commodities. So it's dairy versus iron ore. And coal. But, and this is important, our New Zealand economists expect some pullback in whole milk prices in coming weeks. Whole milk powder prices, sorry. That's whey. Whey powder. Who sells that stuff? Cartman, right? Cartman's got a gym store. Alright, but they still believe that the fair value is significantly higher. 7 cents, 700 pips. Australian data pulse has been a little bit negative. New Zealand dollar data pulse has been a bit more. Now this is important. The long positions. Not too crazy on the Aussie. At least it's been cleaned out a little. Look at these cats. Look at these cats. Huge leverage funds. So that's the highest on record there for the leverage funds in the futures market. But looks like asset managers institutional have got a core short, which is kind of crazy. What do they say about that? Asset management positioning is reported by the CFTC substantially short, which is puzzling compared to the other indicators. Yeah, it is puzzling. Give us more than that. Don't just say the same shit I said. suppose they expect it to roll over at some point. I'm not sure what they're thinking there. Yeah, not a bad little report though from Westpac. Touches on everything that we need to know there. Oh, enjoy big. Enjoy your drinks, mate. We're just going to have a little look at some technicals to begin with, and then we're going to finish with the DMR. Just have a brief little read of what Jim Reed thinks about the market currently. That's what I'm interested in. $200 days still far away. Pull back towards 85 is my core case, at least. I mean, range trading is what I suspect, right? But I really did get suckered into the recovery trade a couple of weeks ago. You guys heard me talk about it on this stream. I underestimated the volatility and negativity towards talk about triggering Article 50, and also just some of the negativity, the dovishness of the BOE in relation to the recent data. I should have been a bit more. I mean, a lot of banks were saying this rally is unsustainable. I just did not take note. I mean, if you're not a full-time analyst of the Bank of England and how they react to data and how they sort of react post big announcement, because they just did a huge announcement, right? It doesn't make sense that I thought they're going to pull it back, right? I mean, they did acknowledge it, but still remained quite dovish, and I think they had to do that, otherwise they look like fools because they just went berserk. You know, just a couple of weeks earlier. So, of course, they're going to be still dovish. And I just completely... It was a mistake by me, right? It was just a mistake. Misunderstanding the BOE. Or just making a mistake on how they're going to react to the recent good data. We're also in the Mexican trade, right? Let's not forget about the Mexican trade. It's a very high RSI. 200 is fairly far away. The resistances are sort of made up because the market hasn't been up here for a very long time. We use a lot of brokers there, Jabravo, but this is easy markets. Easy markets have got options, and options are an important part of how I trade medium term. Alright, so finish with the EMRs, see if we have missed anything here in upcoming today and over the weekend. You know, that's the main reason I read this stuff, right? Just in case there's something that, you know, maybe it'll be an OPEC thing, or, you know, a new unscheduled Fed speaker, or just something in a macro that I miss. The everything rally seems to be sparked by relief that the uncertainty of the Fed is now out of the way, and market feel they have a window to exploit carry. Yeah, okay. See how long that window is open for. Yields tumbled 10 basis points yesterday. Strongest day since the immediate post-Brexit reaction on June 24th. It's a pretty big move, guys. I mean, that sort of favours being pro-risk on for the next little bit, right? Until you might even want to use the 10-year German yields as a little sign of risk on and risk off. If they get back above positive, then maybe the market will focus again on them. If they remain negative, then we still just keep on buying dips on risk currencies. Yeah, there was a bit of an earthquake close to Tokyo, and that started the market moving in the yen. I mean, the initial reaction was a little bit weaker for the yen. But it was a non-event, no tsunamis or anything. Alright, looking ahead, you got all the European data, which was like second readings of it. But the PMIs came in strong for the Eurozone today. Okay, there's a lot of Fed speak tonight. This is pretty important, guys. If the market's misinterpreted the Fed's willingness to raise rates in December, and the odds have not really changed much, then if they talk it up straight away, these four speakers tonight, then potentially you're going to see this become a theme next week. So I think these are the first Fed speakers since Yellen. So we've got Harker, Mester, Lockhart. Can we just quickly check who the dissenters were? I am failing you as an analyst today by not knowing that off the top of my head, but yeah. I think Mester was one. I know Dallas Fed was. Yeah, voting against the actions were Ether George, Loretta Mester, and Eric Rosengreen, who all wanted to cut rates. Or all wanted to hike rates. Interesting, huh? Interesting. So, Mester's speaking tonight. Let's see if she voices her dissent in a public arena. That's something definitely to watch, guys. Alright. Everyone have a good weekend. That's enough for me today. We will talk about dollars next week. Saying there's some movement in the market. Got a little bit of movement in the market. Let's have a look, boys. Oil's popping. You can see that on one of my other screens. Aussie Kiwi. Kiwi's popping. Ooh. Ooh. Alright, risk back on. Was risk back on, boys? We'll see. I'll be back later. I might be in the room. Let you know how I see the market. But keep an eye on dollar yen. That's the most important one, probably. Alright, have a good weekend, guys. We'll be back next week at 9 GMT.